formed my own firm. What was Avoca Property is now Avoca Capital, and we're having a wonderful time working with, on the one hand, some fabulous developers and other sponsors seeking capital, and on the other hand, a great group of family offices and institutions, and seeing what we can do there.
Excellent. Well, it sounds like a pretty fantastic venture going forward. Just tell us, let's unpack that a little bit. What is your main focus that you guys are looking for in today's 2026?
Wow. I guess broadly speaking, on the one hand, we spend a lot of time speaking with, potential sponsors and people who have really interesting businesses and projects that are seeking funding.
Welcome to the Yacht Captain Investor Podcast. I'm your host, Scott Kidd, where every week we dive deep into conversations with real estate pros, business owners, and maritime professionals about their mindset and journey to success. Please help support us on our journey and our channel by liking, subscribing, and commenting below so we can help you in your journey to success. How are you doing today? Scott Kidd, the Yacht Captain Investor Podcast. I have a friend of mine here, Ian Drew. How you doing today, Ian?
I'm well, thanks, Scott. Pleasure to be here. Thank you so much for having me.
Well, for the couple of people that don't know who Ian Drew is, please introduce yourself. The infamous.
The infamous Ian Drew. Well, as you can probably tell from my accent, I live in New York, but I'm certainly not born and raised here. I'm an Australian. I spent what seemed like 1,000 years working as a corporate attorney and investment banker. I was lucky enough to have lived and worked around the world, doing primarily capital markets transactions. My last role at a bank was with Morgan Stanley here on Wall Street. I retired in 22, formed my own firm. What was Avoca Property is now Avoca Capital, and we're having a wonderful time working with, on the one hand, some fabulous developers and other sponsors seeking capital, and on the other hand, a great group of family offices and institutions, and seeing what we can do there.
Excellent. Well, it sounds like a pretty fantastic venture going forward. Just tell us, let's unpack that a little bit. What is your main focus that you guys are looking for in today's 2026?
Wow. I guess broadly speaking, on the one hand, we spend a lot of time speaking with, potential sponsors and people who have really interesting businesses and projects that are seeking funding. And we try and be as transparent as we can in terms of what we think can and cannot be done. There's no point in stringing anyone along for the sake of stringing people along. It doesn't do anyone any good whatsoever. So, we're very fortunate to, as I said earlier, to have a great group of people with some really, really interesting projects. The world is just an interesting place at the moment for many reasons. The good news, some good, some not so good. But the good news is that with the technology seems to, I guess, change the rules of the game so quickly, and what's being done out there is simply fascinating. So we are getting exposures to some incredible people who are doing some amazing things. And then on the other side, we are constantly meeting with potential family offices and institutions that are looking to deploy capital, both here in the US, and I think more and more outside of the US. People are looking at opportunities within the US, and so, absent anything that precludes them from investing here, we are always interested in exploring and building our network there. So yeah, it's a really interesting time.
It especially is. Are you seeing, with everything going on today, are you seeing more people curious about putting and investing in the United States, or is it about the same over the last few years?
I think the former. I think that and this is a really broad statement, so I'm not even sure whether I should make it, but you know what, I'm going to anyway. Why not? And this is just based also on what I hear, so you know, take this with a pinch of salt. But it seems that, for reasons that I can't explain, well above my pay grade, it seems that opportunities in Europe, and we're talking a vast area here. So this again, even these words are coming out of my mouth. But what we are hearing from sources of capital is that it is difficult for whatever reason to invest in Europe. And again, I say that's such a broad statement, but I think that people are saying, you know, we now want to look at the US. I think more so perhaps than 2, 3, 4 years ago when we first started looking. You know, my background, I did most of my work, most of my career was spent outside of the US, and so I have a natural kind of Rolodex of investors who are outside of the US, and I think that you know, despite all of the litany of fears that one can have with, I think, investing the world over at the moment, people are looking more and more at the US and what is being done here as, I think, kind of pioneers in many respects in terms of how technology is being applied and you know, how it's being supported by regulation. And there's just a host of reasons why investors outside of the US are looking at the US. And I say that in an apolitical way. I mean, obviously everyone's got their political views, but for better or worse, they are looking here. Yeah.
Yeah, I would say the sentiment that I'm hearing, a lot of it is similar, you know, and I think over time it has been that way just because the capital markets and everything else, just the way everyone does things is a little faster and a little less, you know, a little more seamless than some places. And I think the opportunity is probably pretty large, especially in that tech sector, because there's a lot of money going into just, you know, from data centers to chip building to everything else. Seems like there's a big movement to bring a lot of that back here. Again, apolitical as well. But you see the sentiment of people wanting those higher tech things here rather than overseas. But that's just my take, and that's just what I'm hearing. But again, that doesn't, like you said, take it with a grain of salt. It doesn't really, you know, I'm no expert. You want to know the one thing that separates investors who win from investors who get wiped out? It's not the deal flow. It's not connections. It's this. Due diligence. Not the skim the deck and hope for the best kind. The real due diligence. Asking the real questions like, who is the sponsor and their team? What is their experience? Does the sponsor have verified exits? What is the downside of the scenario? Are there any hidden fees? If you can't answer these questions and more, you're not really investing. You're speculating or possibly gambling. I built a tool to fix that. It's called the Passive Investor Due Diligence Scorecard. It's free, it's interactive, it's 125 questions across 4 categories. Who is the sponsor's team? What is the market? What are the financials? And what are the potential red flags? You check off what you verify, score updates live. It gives you a clear assessment to help you find out if this is the right fit for your family. It takes about 20 minutes or less, and it could save you years of regret. Use it before you wire another dollar, because the questions you don't ask are the ones that cost you the most. But
well, I think, and I think Scott, on the, you know, it's interesting because there's no one. Look, I'm a 57-year-old Australian based in the States, and there's probably no one less qualified to talk about tech in its purest form than me. Right? I struggle to turn on a computer, but those who have a clue, where we get interested is the effect of tech on energy, on real estate, on infrastructure, and if you had to again generalize, which is always dangerous, and I keep saying that, I think what people are looking for is the infrastructure in place, and even more importantly, I think the regulations, really the the networks that you need to have a degree of certainty for the application of whatever the technology is, right? And so the things that the speed at which things are changing is scary enough, and it's difficult enough to. And again, this is no disrespect to the rest of the world, which is a pretty big call. But I think people are looking for some degree of confidence in, again, I'll use that word, infrastructure to support whatever it is that they're looking to invest in, which is new. So you want a combination of kind of, the new technology or whatever the technology is bringing, with the sort of some degree of certainty on the established infrastructure, the established set of rules, regulations, the banking sectors, and all that comes with it. And I think that change is exciting. Change is where people see opportunities to invest, but they also want, a degree of solidity behind all of that change, if that makes sense.
Yeah, they want to know that there's a surety of some kind of finality or some type of, well, for a long story short, they want to know that they're getting their money back. I was trying to think of better words, but I guess that's all. I know that's what I would look at, because the surety of getting your money back. That's everyone investor thinks of that at some point. But as far as like real estate and stuff, what are you seeing the path forward for you guys? Like, is there any specific assets that you guys are focusing on, like development or in hospitality or multifamily or medical office? Any particular asset class you like over any of the other ones?
I mean, again, we are a reflection of what our investors want, and my role is to understand the needs and wants of our investors and to react accordingly and to bring them transactions that they like, obviously having been analysed and diligenced, if that's a word, to the nth degree. What we're seeing from our core of investors is an interest in hotels. There are, and I think, mixed-use developments that hotels are a component of. So there's some really, really interesting stuff, some really big developments going on throughout the US at the moment. And, these are really, really exciting businesses, for want of a better term. And so we're spending a lot of time looking at those. I've spent a good proportion of the last 4 years looking at multifamily. At the moment, multifamily has its own challenges. It's again, it's an industry, I think, that's going through a degree of change. I think that this is all well established and documented, and I haven't got an original thought when it comes to all this. But I think what it means is that I see it as more of a challenge than some other real estate areas. We're sort of agnostic when it comes to development versus the acquisition of an existing building or plot of land. I think that the data center is an interesting one, and I'm not going to throw my 2 cents worth. Everyone has got their own view on where these things are headed, how real they are, and look, let's be honest, what potential damage they could do, because they seem to be creating as many problems as they're solving. But what I find fascinating, absolutely fascinating, is the way in which data centers have now changed the valuation and the ways in which we are valuing both land and what's on the land. And so there is almost an entire industry that has developed that is seeking to capitalize. Let's call it a traditional piece of land with a traditional building on it. And traditionally, you would value it in the way that has been valued for the past 100 years. Now people are looking at these, hitherto relatively uninteresting plots of land and buildings on it, and saying, what is the valuation according to the data center universe? How connected is that piece of land to the various bits of infrastructure that needs to be for possible usage as a data center site. And so we're seeing not a flood, but we're seeing enough groups that are seeking to acquire plots of land and are valuing those plots of land. And again, these are entirely, the what's on the land itself and how it's being currently used is actually kind of almost immaterial to them. It's it's the position of the land and the accessibility both in and out to what data centers of various sizes need, and the valuations of these things are just completely different. And it's fascinating to me, absolutely fascinating. And I think that's only going to grow as the whole data center thing kicks off in whatever shape or form. And from now I'm being told that data centers are going into the cloud and that land valuations are irrelevant. So it's difficult to keep up, but it's fascinating nevertheless.
Yeah, it is. It is interesting. I see, you and I are both in a lot of the similar groups and everything, and I see data center, and it seems like someone would raise a point to me. I don't know whether it's true or not, but that a lot of capital is moving towards it. But I see a lot of stuff that looks like a data center, but I don't know. I've never really done an actual valuation, but after looking into it just on a big scale, just on a big picture thing, is what seems to be very important is proximity to power and water, cooling, and that seems to be what gives it the biggest value, because I spoke to someone recently that was doing a lot of ESG financing, and they were putting on all of these with the data center there. The cost of it was like 20% or 15-20% more because it had a micro data center. It was a medical office.
Yep.
But because they put a power generation plant, solar and some other generation things, and it had proximity to a river, so it had some additional cooling. And because of that, they got all these other credits and all these other different types of base financing. And so it was a lot more complex financially than I was used to looking at it. I found it interesting, but it ended up making about 20% to 30% more because of the data center and because of the power generation. And I found that, hey, that's a whole nother dynamic that was really very interesting to me, because if you took those two components out of there, it didn't work.
There you go. And that's absolutely true. We've got I just love these guys. We've got a group with whom we're working, who I think are taking a similar approach. So they would have what one might consider a stock standard multifamily development, perhaps with some other retail or whatever it is.
Mixed use, that thing. Yeah.
But they're judiciously sticking, data centers sort of here, there, and everywhere. Not data centers, but these micro data centers.
Micro data centers, yeah.
And all of a sudden, the cash flows of these things changes completely. And you're 100% correct. What was originally perhaps not a fundable investment suddenly becomes, worth that much more. They're very smart. And that's a different concept to, I think, what you just talked about, which is is a land proximate to water? Is that plot of land able to get electricity in and out and all the other stuff that various types of data centers require, which just changes the game completely.
Yeah, and what I found interesting was the micro data center concept. And it also had a power generation plant, so that. I was thinking, because they were saying, and I don't know if this is true or not, that for all the data centers that are going up and everything else, within 5 years, we're going to need 50% upgrade to the grid or 50% more power, something like that. But, that would be the whole just powering it by itself. But if you had these micro data centers and small modular power generation, you don't necessarily need to upgrade the grid because it's all kind of a sustainable built-in model, which I think and I think in Japan and I think in France, they do small generational plants and stuff like that, and they still do nuclear power and stuff like that. Which I was reading where Amazon and I think Google were already approved a couple of years ago to build these small modular nuclear plants for the data centers, which I don't think we've built any in the United States in 50 years, maybe longer. I don't know of any, but I thought that was kind of interesting because people have always been, it's always got politically it's got a stigma to it, what if it melts down and all that other stuff. But I just thought it was interesting because now it's bringing up a whole different mindset with the real estate and with the power and the cooling and everything. I thought it was fascinating.
It is fascinating. And, I talked about the attraction of investing in the US because of the infrastructure. I'm going to come across as a complete hypocrite. Obviously that is an attraction, but, if we're brutally honest, there are certain areas within the US and certain parts of essential infrastructure which really is not great here. And I've always, I ask people constantly as someone who is not born and raised here, why is that? And everyone has, anyone who is remotely interested anyway, tries to explain it to me. But the point being that, if you were a town planner 20 years ago, I would have thought, no disrespect to the town planners out there, but I think that the role of a town planner today is going to be immensely important because you have some real challenges ahead, and you have people that are fighting for that space, fighting for that connectivity, fighting for that water supply, and you already see it. You already see government versus private for whatever resources are needed to operate not only data centers, but of course the original requirements of the grid, the original requirements of the water supply. So it's going to be a really interesting time, and it's going to I would have thought require a lot of involvement from the regulators to referee who gets what.
Yeah, it's going to be a tough thing, and I think the viable solutions are going to be, it's not going to be an either or. It's going to have to be some type of sustainable, ideology that comes out of it. Because I know, there was always this big fight. I remember growing up a good part of my life in Texas that, there was always a big fight between the environmentalists and the oil, and it's like, well, everything was everywhere has basically been built off of oil or whatever. That's a whole nother argument or what have you. But, there was a big thing about recycling, just the amount of waste of water used. But then, they were saying, well, you need to recycle the water. And they're like, no, we're not going to do that. But then they realized they did the calculation that if they reuse the water, it saves them billions of dollars. So it's like, can we just talk to each other and figure this out? There's a way that everybody can work it out. There's plenty for everybody. So we can come up with a solution. It doesn't have to be an either or. It doesn't have to be all data centers or no power, no power, no water for the town. We can, we have to be a little more, we just have to change the way we think about it, I think, or just even be open to giving a little bit here and taking a little bit there or what have you to make it all work for everybody. It's not going to be a perfect solution for everyone because the world is never perfect. We're not perfect, so we shouldn't expect any idea for us to have to be at all. So that's my 2 cents on my soapbox today.
Well, interestingly, the kind of the fights that I was referring to are also based in Texas, which I find astonishing when you consider the resources that Texas has and the size of the state. I would have thought not necessarily Texas would not necessarily be the venue of those kind of discussions, but they absolutely are. And you would have, you know that if it's happening in Texas, it's going to happen everywhere else. So interesting times ahead if times weren't interesting enough.
Yeah, it's never a dull moment these days, and especially in the real estate world, and there's the whole data center thing is really changing the game with in a lot of different ways. Like land that, like you said, was probably rendered useless 10, 20 years ago. Now it's okay. What's going on here? With that, and then it's going to be interesting to see the way it all plays out. Is there any particular type of deals that you're seeing that other than the hotels that look interesting to you going forward in today's markets?
And this, Scott, there is one, or there's a group of deals that I like. These are not sexy deals. These are, deals that tend to sort of fly under the radar. Perhaps, certainly in my world, they do. I really like flex industrial deals, and to me, again, this is something which is growing. It's growing for a myriad of reasons, which I won't bore you with. But the reason why I love these deals so much is that essentially it's to me it's a bit of an arbitrage, right? So if you think of most flex industrial deals that are coming across our desk are essentially a whole group of tenants that sign up as close to a triple net lease deal as you can get. But essentially the costs are passed through to them. And when you think of your classic triple net lease deals, certainly the ones that I used to be in personally when I used to stick some money in a deal, you're getting 5-6% because essentially it was a corporate bond to name your institution, who would be the tenant of a building that you owned. Everything was on them, and you get your 5-6%, again in accordance with essentially the risk of whoever the tenant was. Now with flex industrial deals, essentially you don't have one tenant. Admittedly, you have anywhere from 5 to 100 tenants, perhaps more. But you have, in that sense, you have a degree of diversification because you've got a multitude of tenants. But also, these guys and girls are signing at what amount to effectively triple net leases. And the returns on these deals are not 5-6%. They're, give or take, there's probably a premium of 4 or 5% on your kind of standard multifamily deals. So if they're structured correctly and they're good deals, you should be getting IRRs in the mid-20s. And really, I see that, again, broadly speaking, that seems to be something that is the theme of my discussion today. You are arbitraging, essentially, what amounts to a series of triple net leases versus the return that you are getting. And I see these deals are really good. Now, again, the basics don't change, and they're not sexy deals. No data centers involved, to the best of my knowledge, unless you stick a center in one of the warehouses. And look, the basics are still there. You've got to have your demand. You've got to fill the warehouses with tenants, all that kind of good stuff. You've got to have a good sponsor, good operator. But if you get that right, I think the returns relative to the risks are really good. So we're big fans of the concept, and we are actively, seeking out developers and businesses that have industrial flex, and it's a growing area because there is a need because of the way that the world has gone, particularly after COVID, for people to store stuff and to occasionally operate out of these warehouses as opposed to paying a gazillion dollars to have storefront in a mall. Good asset. I really like it.
Yeah, it's funny that you mentioned that because I've been looking at these for a little while, and where I live, they're looking at eventually putting a train station in probably in the next couple of years. So I've been looking at those small bay type, flex space industrial because there's a lot of mom and pop guys in there, and that, I've been one of the mom and pop guys, working out of a little small place or what have you. And I see the demand because it's more, it's probably a more specialized business that you're going to have to where it's not going to necessarily be affected by an Amazon or or a Walmart or something like that, or the online delivery type business. But you're also going to be looking at that last mile of delivery and stuff where those come into play, because it's tougher for the numbers to work for Amazon to do that last mile. So they're going to be dependent on a lot of these smaller type places. So I really like that sentiment that you're saying, because that kind of goes along. And this is stuff I'm looking at for my own personal portfolio. The smaller ones that they're easier to manage than, say, a multifamily apartment and stuff. And
Yep.
and the what I've found, because I have a friend that owns quite a few of them, and he has, maybe some of them have 20 bays, some are 50. They're what you would call smaller ones. And he said, look, these are all the mom and pop guys that he used to have a carpentry business. And he said, look, that was me. And these guys, if they fall on like hard times, they're not gonna just walk away, you know. And they're the type of people that you can work with that type of tenant structure. Like he said, he had a few tenants that, hey, they had a little bit of a shortfall. They had, contractor business, and they didn't. A couple of big clients didn't pay them, so they had a shortfall. I said, okay, well, just work with me for 6 months, and the guys stayed in. So I do like it that kind of thing is kind of still there, and it seems like it's coming on pretty strong. So I really do like that you're saying that, because you guys are probably looking at a little bit larger industrial, flex space industrial, probably a certain amount of square feet to make sense probably for you guys.
Yeah, I mean, we have just because that's what's come across our desk. We have looked at not massive ones, but decent sized developments. They're not difficult to build, and that's easy for me to say, because I struggle to hammer a nail into a piece of wood. But I'm told by those who actually can build things that it's not like building a hotel or building something that's reasonably complex. They're pretty easy to build, and so your risk on that front is not huge. There is just a lot to like about that business. So we're quite bullish there.
Yeah, I like those as well. This, like you said, it's steel and concrete. So if you're watching the prices and stuff there, those, it's going to be X amount and X amount of hours. It's a little easier to price it out, based on the area that you're in, because the cost is going to be relatively the same. Land price probably going to be similar to that area and stuff. Yeah, I'm with you on that. I think that's a very interesting place to be, because I have a friend that builds those in the Dallas area, but he builds larger ones that are, as a matter of fact, I should probably make the introduction, because he builds to suit, they buy it or lease it, and he's in the Dallas area. And I think one of them, he was building was 150,000 square feet plus or something like that. So
that's a good size. Yeah.
So maybe it might be something that might be worth you guys chatting or what have you. But no, that'd be really, really cool, because I think that's a whole different type of tenant structure, and a whole different, but it's a lot less to manage. But like you're saying, you're looking at, you're not just clipping the coupon like you used to be able to do with the triple net, 5 or 6%. You're looking at substantially more over the long haul, for sure.
Yeah, I think, and again, it's all about risk return, and I think it just sits nicely on that spectrum. And perhaps arbitrage isn't quite the right word, but when I first looked at it, I was absolutely floored. And the very first kind of developer who brought a flex deal to me, I only discovered that these things were a string of triple net, double net leases. Almost at the end of the deal, and I almost fell over and thought, wow, okay, there's something here. So good business.
Yeah, it was funny, because when because I'd mostly been dealing with multifamily quite a bit for years, and then a friend of mine, which I'm partnered with now, he sent me these medical offices, and I looked at it, and it was all triple net stuff or what have you, and I'd studied triple net stuff before, but I didn't really register me. And I said, well, make sure you send the rest of it to me, the underwriting. Said, no, that's it.
that should in of itself, that should be enough to get anyone involved who wants to invest in property.
Yeah, I was like, okay, well, there's only a few line items, a couple of okay, not much expenses. There's some tenant inclusions there, and I was like, okay, well, that's that. And I was looking at it, I was like, why? It was as if I had a newborn baby in my hand, because this is like, there's no chance this can be real.
Yeah.
Just because of all the stuff I'd been looking at that were just obscenely complicated, but well, compared to that, but no, I'm really happy to have you on here, and I really thank you for coming on here. For people that want to get a hold of you and find out more about what you're working on, and more about Ian, what's the best place for them to find you?
Well, thanks, Scott. So we're actually going through a rebranding process. So my website at the moment is Avoca, which is AVOCA property.com. And that's all one word. Soon it will be avocacapital.com, which simply reflects the fact that we're looking at a bunch of stuff now outside of the property sphere. So if you seek me out on either of those two websites, one of which should be up at any given point in time, I'd love to speak to you. We can go from there.
That'd be great. Well, thank you so much for coming on. I really appreciate it. I always enjoy our conversations because we'll get into some really interesting things.
Likewise.
Thank you so much.
Well, thank you very much for having me.
Well, you're welcome. I'm sure this will be one of many interesting conversations. So I really appreciate it.
Likewise. I hope, and listen, thanks for doing this from the boat, which I find amazing. Life is good. I don't know I've ever heard of a podcast being done out of a boat, so good for you, my man.
Well, thank you to the powers that be that got everything lined up today.
Exactly. Yeah. Well done, sir.
Well, thanks again. I'm Scott Kidd, the Yacht Captain Investor Podcast. Just a reminder that the best investment you can make is the one you make in yourself. So invest heavily in you. We'll see you next time.